Good morning, everyone. Welcome to the New York Live, Tuesday Live Trading Room. This morning we will be discussing a few topics, of course, as it relates to Forex and trading in the markets, the global markets. As you guys are aware, we have expanded to include various assets as it relates to our trading, so that not only requires us to look at additional trading platforms that actually offer all of the assets that we desire to trade, but it allows us to really expand our knowledge, expand and diversify our trading. And even though we are expanding, we're still going to keep it simple. So hence the name of KISS, keeping everything safe and simple, stupid simple. There are several S's that you can use as it relates to the word KISS, but for me, it actually is a combination of a few, but for the purpose of our name of the new company, we're just going to keep it safe and simple. What I know that I've learned over the past 3 years of working with you guys is absolutely that. Keeping things simple, to the point, getting in, getting out is really where you guys want to be and really where you need to be, because our goal in trading, of course, is to make money. Whether that is to replace an income, create an income, build wealth, across the board, we are trying to create sustainable, consistent income that we can create the kind of time freedom and financial freedom that we all desire. Whatever that looks like for each of you individually, obviously is going to be different from person to person, but when it boils down to it, we want to be able to be in the charts, not all day, an hour, two at the most, make our PIP goal, make our financial goal, whatever it is that you desire, and then be able to enjoy the rest of your day, the rest of your life as you so fit, whether it's traveling, children, other businesses, because this is just one of the many vehicles that are out there available for you guys to achieve your goals. So with all of that being said, this morning, I want to talk about keeping it simple as it relates to your charts. Most of you guys either have a strategy or working on a strategy, have a plan or are working on a plan. If you are new to Forex, you will learn all of that as it relates to creating a strategy, making a strategy your own, creating a trading plan, but it truly is about systems. We have to, in order to keep it as simple as possible, make sure that we're following a system day in and day out. Doing the same things every day, yes, it absolutely can be boring, but if I could show you a strategy that you could do every day, 5 days a week, doesn't mean we're actually going to execute a trade 5 days a week, but you're going to do the exact same thing every day at the same hour each and every day. And you can take a small account to a large account over 365, 500, 2 years or so. What makes more sense? To do that same thing each and every day, 15, 20, 30 minutes out of your day, or to aimlessly try and figure it out, switching from strategy to strategy, trying this, trying that, trying this, trying that, and not being in any better position than you are now, than you were when you graduated 6 months ago, a year ago, 18 months ago, 2 years ago, so on and so forth. If you look at the time that you have spent trying to figure it out, adding extra things, taking away stuff, hopping from group to group to group, lesson to lesson to lesson, are you truly in any better place than you were in before you even learned about Forex? And if you're not, then it absolutely requires change. It absolutely requires you to take it back to the basics, keep it simple, get in and out of your trades and call it a day. You guys know that from the very beginning I've talked about 10 pips a day, 20 pips a day, all of those things, not because the market doesn't allow you to get your 50, 100 pips. It's about consistency. It's about something that you can do day in and day out, getting out of the trades and walking away from it. We have all had those feelings of being in a trade that we probably weren't supposed to be in. We didn't have a proper stop loss. Your stomach's turning. If you're trying to sleep, you're getting up every 10, 15, 20 minutes to check the charts to see what's going on with the trade. I've been there, done that. It's an absolute miserable life. So the reason that I talk about the 10 and the 20 pips is so that you don't have to live that, get gray hairs and wrinkles long before we're supposed to. It's so that we can truly enjoy the life that we want to live as traders. My trading life today is much simpler and easier than it was 6 months ago, than it was 6 months before that, than it was 6 months before that, definitely than it was when I was a money manager. So if your goal in trading is not to continuously evolve so that you can free up more time while you're making more money, then truly what are you doing this for? So let's look at a day in the life, so to speak, some of the things that you guys should be doing each and every day, regardless of the time of day that you're trading in the markets. These are key things that you have to do in order to make sure that your trading strategy is successful. If you are struggling with your trading strategy, then you definitely need to take the time to figure out what that is about. As you guys know, most times it's going to be you, but there is a good chance that it is your trading strategy and not specifically your strategy, because any strategy will work in the market. You can have an absolute mediocre strategy and you can still get your 10, 20 pips a day, however many you're going to do consistently, to take a small account to a large account. You and your mindset become the key in that. And of course, applying that strategy to the currency pair that it works best with, to the time of day that it works best with. So when I hear people say, oh, Bollinger Bands doesn't work, support and resistance doesn't work, moving average doesn't work. No, they do. That's why they're out there. The problem is you, or the problem is where and how you are trying to apply it. You absolutely, and you guys hear me say this all the time, you don't need all that junk on your charts. You absolutely don't need it. But what you do have to do is understand the simplest of things so that you aren't guessing. You aren't trying to figure it out. Look for those key things that will ultimately win you more trades than you're losing. I'm a breakout fanatic, breakout queen, breakout whatever you want to call me. Breakouts is what I do 99.9% of the time. And my win ratio is over 80% with breakouts, whether it be London breakouts, New York breakouts. I don't mess with Tokyo breakouts much, but if I wanted to, I can apply those same concepts, but I have to make sure that I'm using the right currency pair at the right time. So even when you're going through the process of redesigning your strategy, redesigning your schedule, looking at the different currency pairs, we're going to look at a ton of different assets over the course of the next year, two, however long we're going to be sitting in front of these charts. Hopefully it'll be shorter than 2 years, because the goal in 2020 is for us to take those small accounts and get you guys to your first $100,000, get you guys to your 200, 500, whatever that mark is for you. But we have to start small first, and we have to start creating positive results on a weekly basis, positive results on a monthly basis, building that consistency so that you can get to that first 100K. If we're not doing those things day in and day out, that we need to start making $100 in the market, then there's no way that we can get to $1,000 in the market. There's no way that we can get to $100,000 in the market. So look at your MyFX book, look at your accounts. What are you doing consistently? What are you doing that's all over the place? And really look in the mirror over the course of this week, the next 2 weeks, and figure out what it is that needs to be addressed and changed in your trading so that you can get to that 100,000, 10,000, so on and so forth. And then we'll walk through those processes so that you can do it. If you have to scrap the strategy that you're currently using and start from scratch, then so be it. If you just need to make some tweaks, then that's what it might require as well. I have a little secret strategy in my pocket that I'm going to share, but that is for another class, another day. But it is, I don't know what I'm going to do with this thing, but it is absolutely phenomenal. So, but we'll talk about that on another day. Right now, I want to talk about, because even with the best strategy that I think exists right now, if you're not doing what you have to do day in and day out, if I don't get up at 7:45 every morning to make it happen in the charts, then it's not going to do anything at all for me. If I'm not getting up at 3 a.m. every day, because that is what it might require, then it's not going to happen for me. So I have to make sure that I'm doing everything that I have control over, everything that I can do in order to make my strategy work best for me, the currency pair that I'm trading, and the time of day that I'm trading at. So those very well may be just the simple things that are going on with your strategy that you might need to change. Just because support and resistance or Fibonacci works great for British pound JPY at 3:30 a.m. doesn't mean it works great for British pound USD at 3:30 p.m., Euro USD at 3:30 p.m., or Euro JPY at 3:30 p.m. Am I saying p.m.? I meant to say a.m. Sorry, guys. During the London market. So understanding back testing, really seeing where your particular strategy is playing out best for your particular currency pair is absolutely key. And that truly is the difference as to why the strategy that I'm currently trading is so awesome. I broke it down to, oh, okay, this strategy works really, really great. And then I broke it down to different pairs. And I said, okay, not so much on this one. Oh, it's pretty good on this one. This one is absolutely outstanding. So then once I broke it down to the outstanding with a specific currency pair, I started to look at the times of day. 6 a.m., not so great. 7 a.m., not so great. 8 a.m., things are starting to look good. Everyone doesn't have that flexibility to truly be able to break it down in that way. But look at your trading schedule, look at what you have defined for that schedule, and find the perfect time within that schedule, the perfect pair to match that, and you truly don't have to trade any other pair. I have not traded any other pair since July or August. What are we in? November, July, August, September, October, November? Yeah, since July. I haven't traded any other pair. I only do one trade a day, and I am done. Simple, fast, in and out, and then off to all of the other things that I do during the day. So that is the kind of life that I desire for you guys. But again, it starts with doing the same thing every day when you get up in the morning and making sure that you are present and in the charts. So what kind of things should you be doing when you get up in the morning? I have not checked the economic calendar, and hopefully I am not about to miss something that we can trade. So let's go ahead and look at that really quickly. And then we'll get back to Forex Live. So let's start with your pair of choice. What is the pair, asset, and when I say pair, I'm talking about everything across the board, not just Forex majors, Forex crosses. If you're trading gold, if you're trading U30, if you're trading oil, whatever it is that you're trading, what is your asset? What is your pair of choice? Whatever that is, and at this stage, since we want to go ahead and just start with a clean slate, figure out what that one thing is. Mickey posted in the group yesterday or the day before and said that she's been focusing on gold more than anything. So let's take that as an example. If gold is my currency pair of choice, I need to, number one, know what affects gold. We obviously know that it is considered a safe haven when the dollar is going bad. We know that Australian dollar is highly correlated with it. So understanding those things that are highly correlated with your asset is going to help you to understand what the heck is going on with your particular asset. So understand that. Okay, let's see. We have building permits. Sorry, I just want to check real quick to see what's happening at 7:30. All right, so we just have that at 7:30. So we'll see what happens. Probably a little bit of nothing. Looks like the numbers have changed quite a bit in the building permits change, gone down about 2.4%, but we'll see whether or not that affects the markets or not. All right, so understanding your asset first and foremost is number one. What is it? What commodities? If you're trading USD CAD, know that oil is highly correlated to USD CAD. So if oil is going crazy and there's crazy stuff going on in the oil fields and oil wars and all that stuff, your currency pair is going to be highly affected. Those are those hidden fundamentals that are happening in the background that aren't going to show up on an economic calendar that we just looked at. But it's you as a trader, your responsibility to know truly what is going on with your pair. Make that your bae, your boo, your best friend, whatever you want to call it. Make sure that you know what's going on with it. So if gold is my particular pair of choice, then the first thing I want to do, because obviously I'm not trading 24 hours a day, I'm only trading an hour a day at best. If gold is that pair that I want to trade, then the first thing I'm going to do is wake up in my designated time, because I've figured out that 7 a.m., let's say, obviously I don't trade gold, but let's say that 7 a.m. is the best time for gold trading. If that is the case, then I'm waking up at 6:50, 6:45 so that I can look and see what the heck happened with gold from the last 24-hour period that I traded. Is there anything going on with the US dollar that can affect gold for the day? What truly is going on? So I'm going to go to my Forex Live and I'm going to look for information on gold. If you don't feel like scrolling all the way down, this looks like an article I want to read later. If you don't feel like scrolling all the way down, then use the little tools that come with your computer. Find either XAU or the word gold to see what shows up. XAU isn't showing up on here. So look for the word gold. It says that there are 6 indications of it, so I can just go to it and see what's going on. Make your life as simple as possible. Your research period, your plotting period, your analysis of the charts before you start trading does not have to take you 30 minutes. It does not have to take you an hour. This is truly something, especially when you're doing it every single day, that can take 5-10 minutes of your time. I literally, outside of my dogs waking me up to put them out for my trading day, I get in front of the computer 7:45, do just this, plot out what I need for my currency pair, and wait for it to execute. So my prep time before I start trading is less than 15 minutes. Now, my strategy allows for it to be very, very small, but I'm still going through the charts looking to see what's going on. What's driving gold at the moment? This is something that you need to read. Go to the next thing. It has 3 on gold. I guess they're all on gold. Go through the process of looking to see what is going on with your particular asset so that you can understand at least something that may have occurred overnight. When you go to the charts, you see it's at a high, you see it's a low, you see it's consolidated. Whenever the markets are at extremes, then there's something going on. High highs are an extreme, low lows are an extreme. Tight consolidation that is never ending is an extreme in the market. Typically the markets ebb and flow in a way that we can naturally follow. If the markets are not doing that, that is a key indicator for us to go and look up some things to see what's going on. So spend the first 5 minutes looking at Forex Live, Daily FX, whichever your website of choice is, to find out what's going on with your pair. If you need a little bit more information, go to Google. He is our best friend sometimes. Put in gold, put in oil, put in whatever it is that you're trading, US 30, Euro USD, see if there's any key things that are coming up within the past 24 to 48 hours so that you can understand what's going on with your pair. You're not necessarily going to use that information for specific trading decisions, but you're going to add that to your brain and your toolbox for the day so that you can make sure that you're making quality trading decisions. Then, of course, you're going to hop over to your economic calendar, see what's going on as it relates to specific reports that are going to come out. These are the things that we know. These are the things that we can actually see. So they're just going to play a part in everything that we do. If I know I'm about to get into a trade, or I see certain setups that I've defined and I know that these reports are coming out, then I'm going to be more cautious, especially if it's a high impact report. If it's a medium level, a low level report, I may not have to pay any attention to it at all, but this is all part of my toolbox as well, knowing what is going on in the markets as it relates to those the economic calendar and reports that are scheduled to come out during my trading time. Then, of course, I'm going to go to my trading platform, whatever trading platform that you have chosen for yourself. If you're talking about trading multiple assets across the board, as U.S. citizens, we have slim pickings. International individuals, you guys have a lot more options as it relates to trading on great platforms that offer you amazing options when it comes to the assets that you can trade. Hugo's Way is the platform that we will be trading on in 2020 as it relates to the lessons involved. Whichever platform you want to trade on is your choice. I have chosen Hugo's Way as the platform of choice for teaching in 2020 for multiple reasons. One, the number of assets that they offer is absolutely insane. When I first saw this, I don't keep up much with the new trading platforms that come out because literally a new one comes out every single day. So it takes you guys to ask me about one, and then of course I'll research it and see what's going on with this. So when I researched this, it has so many different options. My brain was spinning. I literally was looking for my mom's name to be on here. That is how many different things you can actually trade on here. Of course, you have the regular Forex stuff. You have all of the crazy exotic pairs. You have the cross pairs that we're used to as well, FX crosses. You have the indices, which I have come to know and love. You have futures, only dollar futures on here. I assume that since they have dollar futures on here, ultimately they will add more as time goes on. You have stocks on here as well, and look at the sheer number of stocks that are on here that you can actually trade. It literally is insane. I don't think I have gone through every single one of these just to see what they trade. You have energy, you have metals. That's going to be your gold, your silver, all of that good stuff. And then you have your cryptos as well. And not only does it have your cryptos versus the US dollar, but it also has your cryptos versus each other. The other thing about Hugo's Way that I enjoy for the cryptos, because obviously the crypto market never closes, you can trade cryptos on the weekends as well. So if you're getting that Forex fix or that trading fix that we all encounter sometimes, where we wake up and it's Saturday and we're like, damn, the market's closed. On this platform, you can actually trade cryptos as well. So it allows for a lot more flexibility with your trading, and truly once you have a strategy that you can successfully use, it's a matter of applying it to the charts. It's a matter of looking for those same things on any asset that is in front of you and then executing your trades accordingly. So if you're using support and resistance over the weekend, support and resistance works on those cryptocurrencies no differently than it works on your regular Forex pairs during the week. If you are trading Apple, I actually plotted Apple out yesterday. This was Apple's movement on the 15-minute chart yesterday. I'm going to hop to gold here in a second, especially at 7:30 when this report comes out. But here you can see that I've plotted out some support and resistance zones for what Apple was doing yesterday, trading stocks, and these are not your regular, they're your regular stocks, but these are called CFDs that you're trading on these Forex platforms. So it allows you to trade it no differently than you would, or how you guys have learned to trade Forex on these same platforms. And you would do the exact same thing with them. You would start with your macro and go to micro, whether it be you starting with the monthly, the weekly, the daily, so on and so forth, looking for those same key things that you would on any of your regular charts. Apple is trading at an absolute all-time high. We can see here that it broke through resistance and has continued to go up an additional $40 since then. Weekly is showing you the exact same thing. Understanding truly how to define the movement and the sentiment of the market, knowing when it's in an uptrend, knowing when it's in consolidation, a downtrend, uptrend again. Obviously, the markets, the stock markets have that specific 8 to 5 period, so you're going to see quite a bit of gaps between day to day, but defining your trend, knowing what those possibilities are based on your trend. The market's currently in an uptrend. It's at a high of a day, all-time high. So what are your possibilities as trading goes? Obviously, the uptrend can continue. It can go into consolidation, or it can reverse. All markets are the same. They can only do 3 things. They can go up, they can go down, they can go sideways. There's nothing else that they can do. So it doesn't require us to jump through 50 hoops to figure out whether it's going to go up, down, or sideways. We can use the information that is in the charts in order to give us that. So based on yesterday, we definitely see that it was in an uptrend all day yesterday. We see this period of consolidation that took over about early afternoon, excuse me, early afternoon. This was on Friday, excuse me. Early afternoon on Friday, the market went into consolidation, closed out in consolidation, and then all day yesterday, the market was in an uptrend, currently in consolidation. If I was trading Apple today, I'd be looking at a break of 267.23 in order to get into a buy. No rocket science. It's simply what the market is showing me. I got to make sure I have my proper confirmation, but there's no rocket science at all there. Simple and to the point. I don't need a bunch of other stuff on my chart to tell me that it hit a high level, and that if it breaks strongly above that level, then I have the potential to make money on a buy. With it being at its highest level of all time, do I want to be more cautious? Absolutely. I don't want to get faked out, but guess what? If I get faked out, I've already analyzed what my risk is going to be. I've analyzed what my reward is going to be. So if I get faked out, I know in advance how much money I'm going to lose on this trade. It's not going to drop to the bottom and I'm going to lose thousands of dollars, because I have full control over my take profit and my stop loss. I don't have control over the market, but I do have control over when I get into a trade, where I place my take profit, and where I place my stop loss. In this case, since we don't have anything else to go off on because we're at an absolute high, then what I do need to do is figure out where would I put my take profit. If I look at the volume that occurred in Apple yesterday, we can see from when the market opened, it was about 265. about 267. So we're looking at about a $2 range that the market went from yesterday, all day yesterday. So does it behoove me to put a take profit that's $10 above? Absolutely not. I have to look to see what the market traditionally does. If it only ranges about 40 cents, 50 cents, a dollar, then that is what's going to make sense for my take profit if I'm getting into a buy at this high level. Same applies to my stop loss. Look and see what this particular pair, that particular asset is doing to help you better define what your take profit and stop losses are going to be, especially when you're in a zone where you don't have any data. There's no way for us to know whether it's going to go to 268, 269, 267.75. We don't know because there's been nothing here. But what we can do is use what the market has shown us the past couple of days, the past couple of weeks, as it relates to what Apple's doing. We can look at the fundamentals that are involved. Why is Apple rallying? Those of you who invest in Apple, you'll have a little bit more information as it relates to that. Does it have the propensity to go up further, or is it time for a correction? All of those things we consider, but as day traders, we're going to get in these trades, we're going to make our money, and we're going to walk away. If you're a swing trader, then obviously you're looking for longer term. What would you do in this case if you're looking for longer term? Do you expect Apple to continue to go up, up, up for the next 3, 4, 5 days as a swing trader? Do you have information that's actually going to support that decision? You always have to have supporting information and supporting documentation in order to truly execute and exit all of your trades. Let me hop over to gold. All right, so here we are with gold. Any questions about what I just said as it relates to not just Apple in general, but using those same techniques across the board when it comes to our trades? Keeping it simple so that you know that you know that you know what the market is showing you, and you're making decisions solely based on that. I can look at this. Currently, we're on gold 30-minute chart. I can look at this 30-minute chart and I can absolutely see that the market has a zone right in here. And it is trying to break above that zone as we speak. So if I went through the process of doing my macro to micro analysis, look to see what was going on with gold, look to see what's going on with different things. Obviously, gold has been in a range a little above the 1500 price, a little below the 1500 price for quite a while now, some months. Based on what we're looking at on this daily chart, the market is definitely trying to get back to that 1500 price. So if I'm a long-term gold trader, I'm absolutely keeping that in mind. Right now, we absolutely see that the market is in consolidation. If I go down to an hourly chart, we can see that it was in consolidation overnight. Since then has broken down a few hours ago and is on its way back up into the consolidation that it was in since yesterday, around this time yesterday. So I can use the information from yesterday, I can use the information from overnight to help make my decision as it relates to getting into a buy on this particular asset. If I go down to the 30-minute chart, or if I go down to the 15-minute chart, I'm going to see a little bit of the same. We do definitely have some wickiness, as Carrie would call it, from these pairs. So we know that these candlesticks that look like this are indicative of both the bulls and bears fighting it out. We have a little bit more bullish control going on, but there's definitely some sellers in here as well. So from a perspective of me truly pulling the trigger on a gold trade this morning, I want to make sure when I look at these wicks, this tells me that there were absolutely some sellers that came in at the 1469 price and brought gold back down. So if I'm thinking about getting into a trade, I want to make sure that it gets past that sell point, because this absolutely is a sell point, not only just in this past 15-30 minutes, but when I look back to the left, I can see that it was a point here, it was a point here. This is where our support and resistance zones come in. It was a point here, it was a point here. So I definitely need to think about this zone, because what can happen? It can break above this zone and I can get into a buy. It can reject this zone and I can get into a sell. My decision can only be made based on what the market does once it approaches this zone and either breaks through or rejects it. If I am strictly trading the break above because I do see that there is bullish momentum and bullish sentiment going on, then I'm going to look for a nice, clean, volume-filled break to get above that 1469 level, and I'm going to get into a buy. I got to look to the left to see what's going on with my take profit zones. I can see a point of contention right here where the market is probably, if it does a nice clean break in here, here is where my first level of resistance is going to come in. So I need to keep that in mind. There's no point in me executing a buy and sticking my take profit way up here, only for the market to hit this resistance zone, come back down and take me out at a stop loss. So I always have to be cognizant of what has happened once the market broke through that particular zone in order to give me additional information as it relates to making good quality trading decisions. What else do I need to know about gold? What else do I need to know about trading in the mornings? The stock market opens at 8:30. So if I'm trading at 8:30 in the morning and I'm trading a pair that is highly correlated to the stock market, like gold, like U30, obviously it's the Dow, NASDAQ, SPX, USD, JPY, Euro USD, all of those things that are dollar driven, so to speak, I need to be aware of the fact that once 8:30 kicks in, the chances of the market doing some crazy things are pretty high. So though that's a whole other fundamental all within itself that I need to be knowledgeable of and know that as that clock is coming, gold is either going to keep going reverse, so is U30, so is USD JPY, all of those things. Using some of the pre-market data, depending again on the asset that you're trading, is going to help you in those trading decisions, especially when you're trading in New York. There's a reason that New York has the highest volume as it relates to the markets, not only because the London-New York crossover occurs within it, but because there's so many other things that are going on during this morning time frame as well. So most traders all over the world are trading and done before 11 a.m. Eastern Standard Time. So if that is the case and you know that's when the most volume is in the market, trading at 1 p.m. unless it's FOMC doesn't make any sense. Trading at 3 p.m. unless it's something going on doesn't make any sense. We want to get in and get out of the markets and be about our business. All right. Here is U30. We're not seeing a lot of movement just yet. It is 7:40. We can see here that U30 along with the NASDAQ are all at high highs in the market. U30 actually overnight hit another high. Same thing that we talked about with Apple. What can it do? It can continue up, it can go sideways, it can reverse. Those are the only three options that we have here with the US 30. We want to be cautious at the high level because, of course, at that high there is the possibility of it reversing, and the possibility exists that it's going to reverse pretty hard. Do we know whether or not that's going to happen or not? Nope. But we can use the clues that the market gives us. So we know overnight, I can't see that tip of the tip. Let me go down a little bit. We know overnight that it got to about 28,169. Let me see if that is accurate. Nope. Let's bring it down a little bit. So we know overnight that it got to 28,162. That is the high of the high of the high of the high. What is absolutely going to happen at this level? Two things. The market can break through and rally further, or it's going to come back to this level and come back down, similar to what it did right now. There's definitely some sellers at this level. How do we know that there's sellers at this level? Because it went up, 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 hit this zone, came down, tried to go up again, didn't make it. Buyers tried to come in, didn't make it. Buyers tried to come in again, didn't make it. And then the sellers took over. So we can definitely say that the markets in general, from a US market perspective, are definitely in some bullish momentum. What can change that? China stuff can change that. There's a lot of fundamental, just Trump in general can change that, let's be honest. There's a lot of stuff that can happen that this chart can go red really, really, really fast. So we have to have everything that we need in place, our take profits, our stop losses, so that we can protect ourselves at all times. But from a buy perspective, we know that 28,161 is the zone that it hit overnight. So that's definitely something that I'm going to pay attention to. I'm going to pay attention to the fact that U30 very well may go back up to test this zone again. If it's during my trading hours, I want to make sure that I have my trade setups already defined. I can see a top here that the market began to create. So for me, I'm going to be looking for it to break above this 28092 zone, maybe a little bit higher. I need to do a little bit more plotting and looking at my other time frames to see whether I like the 28097 or the 28093 a little better. I can see it's right there at that 28100 zone. No different than all of our other assets, those 000s are psychological levels across every single asset. It doesn't matter if it's gold, it doesn't matter if it's euro, it doesn't matter if it's US 30. So that area is right in here as well. So I'm going to, and you can see that if I were to place a support resistance zone right here, then that is right there where it's sitting at the 2800. And we can see here where there was a little bit of a false break. It tried to get in here. And then we can see here that it absolutely sat on it. So I would probably wait for the 28,100 to break in order for me to get into a buy today. On the bottom side, it is sitting right on top of where that break of consolidation would occur on the bottom side. I'm looking to the left to see what's really going on so that I can make a good decision on how it approaches this zone, whether or not I would use right below here as a true point of entry, and even where this wick is, because obviously this wick exists for a reason. If we are not paying attention to the signs that the market is giving us, then we're getting in trades too soon. We're getting in trades too late. We're placing our take profits and our stop losses in areas that they need not be. So this area here definitely tells me that buyers came in. The bears were in control. It got to this zone here, 7:45 clock. I did not see a report at 7:45. The bears were absolutely in control. It hit the 28,069 and buyers immediately came in and took the price back up almost a good 30 points. So definitely something to keep in mind as I'm looking at this area. And look what happened here. If I had used this area solely, then I could possibly be in a sell right now because it broke that area. And this is the zone that it's respecting the most. So looking to the left so that you can see what's going on. Now I'm not in a trade prematurely. This is the second time that it is sitting on top of that 28069. I'm keeping that in mind as well. So in order for me to get into a sell on US 30, I'm going to need some strong momentum that comes out at 28069 and breaks through that in order for me to get into a sell. Otherwise, I'm going to be waiting to get into a buy at the 28100. Could I have traded a pullback here? Absolutely. If that's part of your trading strategy, we can see where the market is definitely bouncing up and down. So if that's part of your trading strategy, you definitely could have gotten into a buy there. I'm a breakout lady. So I'm going to wait for the volume. I'm going to wait for the breakout, and I'm going to go with the way that the market's doing. I don't like playing with that indecision stuff. So there is U30. Let's see what else. We did gold. We did U30. What else are you guys trading this morning? Obviously, we are in the midst of the London, New York market. Here is British pound JPY. British pound JPY has been in a crazy 150 or so pip consolidation since October. Why? Because we're in Brexit, of course. Brexit was trying to make decisions. We were hoping for an October 31st decision, and that sucker just got prolonged to who knows what, who knows when. So this is just pure broad consolidation that British pound JPY is in. Definitely availability to make some good solid trades. Obviously, you have to be aware of what's going on with Brexit in the background, although we haven't had any huge moves because of it lately, because we are kind of in a unknown zone. We've been in an unknown zone for a long time, but it's more unknown right now. So it hasn't had a lot of big, huge moves, but that doesn't mean that today is not that day that those big, huge moves happen, or tomorrow or the next day. So make sure that if you're trading any of the British pound pairs, yen, Swiss franc, all of those things, that you keep that in mind in your trading so that you don't get caught up. And the same applies for all pairs, but if any of you guys are British pound Swiss franc or British pound yen traders, you know how quickly it can go bad. So I think my go bad might have happened this year to the date, to be exact. But we know how quickly that can happen, especially when it's Brexit related. So you always need to make sure that you're minimizing your risk in everything that you do. So for the most part, overnight and all of yesterday, British pound JPY from an hourly perspective was absolutely in consolidation. On a 15-minute perspective, you see that same broad consolidation, but definitely opportunities for breakouts and pullbacks in this scenario. Look for your high points, look for your low points, look for your tops and your bottoms, and then make your trading decisions accordingly within the consolidated world that it is in. British pound Swiss franc looks a little bit of the same, but still we have some definite breakout opportunities that occurred for you to be getting in some about 15, 20 pip moves overnight that would have occurred yesterday a little bit longer. But again, so the same thing I'm going to do with my British pound pairs is no different than anything else. I want to look for significant areas first and foremost. If I have not already plotted them out, if my lines are already plotted, I want to make sure that my lines are still solid lines, because things change, the markets change. So I need to be able to be flexible and adapt with that as well. excuse me, and then look for those areas and select what my trade setups are going to be. The market is currently in consolidation. What are my options as it relates to consolidation? This is pretty tight consolidation. We have about 10, 15 pips here. So I know that a break above is an option for me, a break below is an option for me, and I'm just going to wait for either of those to happen. Once it happens, I'm looking for confirmation. Strong volume confirmation is my go-to, but there are absolute times where close of candlestick is a better trading decision. If it is, then that's what I'm going to use. Either that or I'm going to sit out of the trade. If I'm solely looking for strong volume, then close of candlestick does not matter to me. The only time I personally would use close of candlestick is if the market was moving like this, and if the market's moving like this, I'm not trying to execute a trade anyway. I'm looking for strong volume moves in the market. Ooh, here is Euro British Pound for those of you who like this pair. Definitely some consolidation the entire night, so not much you could have done at all yesterday after 8 p.m. We did see some movement here about 3:30 or so. So this would have been your breakout move for Euro British Pound last night. And this is where it goes back to understanding how your pair works during specific times of day. Euro British Pound is no doubt a London pair. So naturally, you would say I should be trading Euro British Pound during the London market, and you're absolutely right. But the London market starts at one time and goes until 11 a.m. So what time of day during that London market is it best for you to trade the Euro British Pound? Based on yesterday, I would definitely say that it is about 3:30-ish, and if I look at 3:30-ish Central Standard Time, going backwards, looking at the charts, if I'm seeing especially breakouts and I'm looking for breakouts, I'm going to look for, on a consistent basis, when is Euro British Pound breaking out of consolidation overnight. And I'm going to define my trading schedule, if possible, around those times so that I can take advantage of the moves that are happening in Euro British Pound 3-4 times out of the week. There's going to be a day that all of our currency pairs are in consolidation. Yesterday, I didn't trade. My pair was in, the move in my currency pair occurred around 7 yesterday. I don't trade until 8 o'clock, so I missed that move. It was in consolidation for the rest of the day, the rest of the night, until late yesterday evening. Could I have gotten into a trade at that time? Perhaps, but there's no reason for me to do so. Once my trading day is done, my trading day is typically done. I might peek in the markets, but I'm not executing any trades 99% of the time. So I need to know if Euro British Pound is my pair and I'm trading it in London market. If I'm getting up at 1 a.m. and my moves aren't going to occur until 3:30 a.m., 3-4 days out of the week, why am I getting up at 1 a.m.? I need to be getting up at 2:30, 2:45 so that I can truly be fresh. I can be ready for the move that typically happens. Is there going to be a day of the week that it doesn't happen around that time? Of course. But that is just, we can't expect the markets to move and dance for us at the same exact time every day. We just want to know what is most consistent, and that is what we're going to build our strategy and our trading schedule and select the proper pair for that specific time. I don't know, let me tell you, disclaimer, I don't know that 3:30 is the perfect time for Euro British Pound because I don't trade it and I've never back tested it to see when the breakouts typically happen. I'm just referring to the fact that it seemed, at least for last night anyway, it happened at 4 a.m. No, it happened at 5 a.m. this morning. So whether that happens on a consistent basis or not, I do see movement a little bit before that, a little bit after. Whether it happens consistently, that is something that you would have to go back test, see When is it typically breaking out? This one broke out here at 1700. So that would have been at 9 a.m. yesterday. So figuring it out so that you can use the proper strategy for your pair is absolutely going to be key. Dollar futures, we would look at this no differently than we looked at everything else from a macro to a micro perspective. I don't know if any of you guys trade it. I've never traded it. There's so many dollar options out there. If I'm looking at assets that are pretty similar, like US 30, obviously, the USD based pairs are dollar driven. This obviously is going to be dollar driven. Then I'm going to look for which currency pair is going to give me the biggest bang for my buck. And for me, the biggest bang for my buck is going to be the most volume in a given period of time. I don't care that it is like Euro, British pound is a perfect example. I don't care that it's $1.20 for my dollar or $2. Some of the pairs are $2 for your dollar if the movement isn't there. If I can do a pair that is only paying me 90 cents and that sucker is going to go 100 pips in an hour period of time, then that is going to be a better pair for me than a pair that goes $2 and is only going to go 10 pips in an hour period of time. So that is something that you need to define for yourself as well. What are you truly looking for during that time of day that you're able to trade so that you can find the currency pair that works best for you, does typically what you need it to do in a fast period of time. The algo trades or the KISS bot trades, if you guys had a chance to look at the what do you call that thing? My FX book, you can see that KISS bot, the average amount of time that it is in trades is very, very, very short. And the KISS bot strategy that the KISS bot uses is the exact same strategy that I'm currently using to trade. We didn't trade yesterday because it was in consolidation all day long, so that's why you see nothing for the week. But you can see here that it tells you time. It tells you time somewhere around here. When most of the trades are executed, you can see here that most of them are executed at the 1600 hour, a few at the 1700 hour duration. There we go. And on average, they are less than 32 minutes. Here's our 32-minute, it's less than 30 minutes on average, most of the trades. So I can truly get in and out of the market, go back to bed, go to the gym, do other work before an hour has ever even gone by. Why? Because the currency pair that I've selected and the time that I have selected to trade that currency pair. I could not get those same results if I was trading that sucker at 6 p.m. I couldn't get the same results if I was trading that sucker at 2 a.m. So really being able to find your pair, your strategy, and the hour in which you're trading it is going to make a huge difference in how much time you spend in front of the charts. All right, so it is 8 o'clock, ladies. Any questions, comments, concerns? A couple of things for housekeeping. I probably should. Oh, did it, Mickey? I just saw Mickey's post. Oh, there it is. Is this gold? Yes, this is gold. I forgot where it was. I wasn't paying attention as much as I should have because gold is not typically my pair. Was it above the 1469 and it came down? I assume so. Okay. Any questions, ladies? A couple of announcements in housekeeping. Well, no housekeeping rules. Housekeeping is only for class, but a couple of announcements. Most of you guys know that I'm doing the early bird special for the 2020 next year. I actually spoke with Thinkific yesterday, and they did an upgrade to my account. So for those of you who have friends and family that are planning on taking it, or if you are taking it yourself, I'm going to be uploading a second coupon that will allow you the early bird special on the monthly plan. Originally, I had told you guys that it wasn't available for the monthly because the platform didn't allow me to do it. But I did do an upgrade yesterday, so now the specials can be done on a monthly plan as well. That does not apply to the alumni special, but as far as the early bird special, we'll be doing a friends and family special. I see movement. Oh, no movement there. All right, as far as, it's my trading hour, so I need to get off this call. As far as the monthly payment plan, so the $300 off will be taken off of the monthly. The regular monthly, I believe, is $400 a month. So with the special, it brings it down, obviously, I think to like $325 or $300 a month, something like that. I don't know off the top of my head, but I will be posting that as well, that you can share. The friends and family I will get posted out to. And if you guys have any questions, then definitely let me know, and we can have some dialogue, talk about some strategies, and talk about some pairs here in the group. You guys have a great trading week, great trading day, and I will see you guys in the group.